Good morning everyone. Hello and welcome to the weekly commodity audiocast. I am Kaina Chanwala from Kotak Securities Commodities Research Desk, and like in every episode we will be navigating through latest development in the commodity markets, factors influencing market sentiments, and exploring the latest trends in this dynamic world of commodities. So let's get started. Uh, in the previous week, gold shone yet again and continued to display its unprecedented strength, while risk appetite continued to waver as latest US labor market data quelled urgency for the much anticipated first rate cut, whereas rally in oil prices added to inflationary jitters. Mixed Fed comments, signs of a resilient US economy, and rising oil prices led to rate cut uncertainty and kept dollars in a narrow range. In the latest speeches, some Fed officials spoke conservatively about policy, with Minneapolis Fed President Neil Kashkari wondering if the central bank should cut rates at all if inflation remains sticky, and Richmond Fed President Thomas Barkin remained uncertain on the pace of disinflation, while on the other hand, several others still expect the US central bank to cut rates 3 times in 2024. The comments followed Fed Chair's speech earlier this week when he reiterated that rate cuts might be appropriate at some point this year, even though there's no hurry. Fed Chair Powell said recent inflation figures, though higher than expected, did not materially change the overall picture, though he reiterated that policymakers will wait for clearer signals of lower inflation before cutting interest rates. On the data front, US JOLTS job openings stayed at historically high levels, hinting towards a still strong labor market, while on the other hand, a strong manufacturing PMI was countered by ease in services PMI. Now talking about the most popular commodity these days, gold. Spark in gold refused to fade last week as well, as COMEX Gold prices witnessed a third consecutive weekly advance and rose to a record high of $2350 per ounce amid escalation in geopolitical tensions, prospect of Fed rate cuts, and robust central bank buying. A recent World Gold Council report showed central banks continued adding to their gold holdings in February, marking the ninth straight month of accumulation, with China dominating the purchases. PBOC increased reserves for the 16th consecutive month by 12 tons to 2257 tons in February. Total central bank net purchases amounted to 16 tons. Even though record high prices and elevated rates are hurting retail demand and ETF flows, central bank buying is supporting overall gold demand. Silver rallied as much as 10% last week and jumped to 3-year high of $27.6 per ounce, buoyed by sharp upside in both gold and industrial metals. On the price action front, on the weekly chart, if we see, MCX Silver May has closed above its falling channel, which is in conjunction with the Ichimoku Cloud upward breakout. If prices sustain above rupees 81,000, it can push the counter to its next resistance place at rupees 83,500. Talking about the oil prices, renewed war risk premium fueled rally in WTI crude oil to $87.63 per barrel, highest since October 2023, as Israel has increased preparations for potential retaliation by Iran after Monday's airstrike on Iranian embassy in Syria, increasing concerns of a wider conflict in a region that's home to almost one-third of global oil supplies. Ceasefire talks between Israel and Hamas also remain in deadlock, signaling the potential for more upside in crude oil prices. On the price action front, MCX crude oil prices April contract on the weekly chart, it has given an upward breakout of its falling trend line, affirming bullish presence. In addition, RSI 14 has surged above its 50 level. Next hurdle for the counter is placed at rupees 7530, above which major resistance is placed at rupees 7750. Moving on to the next commodity counter, base metals. LME base metals too remained hot this week and witnessed a rally of more than 5% as expansion in global manufacturing activity in March boosted hopes of demand recovery. Tight concentrate markets paved the way for sharp upside in copper and zinc, while prospects of delayed smelter restarts in the Yunnan province boosted rally in aluminium to one-year highs. LME copper prices jumped to highest levels since January 2023, owing to lingering supply risks as traders assess the production cuts announcement from China and disruptions at major mines. This week, US inflation numbers would be in focus as latest jobs report displayed economic resilience and defied fears of a recession, even amid high interest rates. While the non-farm payrolls advanced, the US labor market data that came in last week showed that the non-farm payrolls advanced 303,000 last month, following a combined 22,000 upward revision to job gains in the prior 2 months. Fears of an accelerated inflation receded as participation rate rose to 62.7%, the first advance since November, and average hourly earnings met estimates at 0.3%. This has now complicated the Fed's decision of a June rate cut and in turn added more weightage to next week's CPI and PPI figures. So other than US inflation figures, other notable market movers would be China new loans and inflation along with ECB monetary policy meeting. As per Eurostat data for March 2024, annual consumer price inflation in the Eurozone dropped to a 4-month low of 2.4% in March, below the expected 2.6%, as well as core inflation rate, excluding volatile food and energy items, decreased from 3.1% to a 2-year low of 2.9% in March. So now markets would keenly wait to see whether an unexpected decline in Eurozone inflation in March pushes ECB towards early rate cuts. So on that note, we wrap up this edition of Commodity Audiocast, and we hope that we were able to provide you valuable insights. Thank you for tuning in today, and we look forward to having you with us next week. Until then, happy trading. Thank you so much.